If you are a sole trader, partnership, or limited company business, then the maintenance of your numbers is usually achieved by a combination of bookkeeping and accounting, for which many would appear to be one of the same, but there is a clear difference between the two functions. In this video, we will cover what exactly is bookkeeping, what exactly is accounting, the difference between accounting records and financial statements, the three key differences between bookkeeping and accounting, and finally, can you do your own bookkeeping? Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you real quality advice from real qualified accountants. So bookkeeping is the process by which a business records its income and expenditure in an organised format. The person who undertakes this role is known as a bookkeeper. This applies whether you are a sole trader, partnership, limited company, or LLP business. Before computers and software advancements simplified the process, this was usually done by manually copying transaction details across from the bank statements into what is known as a cash book, which allowed the bookkeeper to categorize the transactions by type before recording a monthly or weekly total for each income and expense type. This process would usually be repeated for different bank accounts and any petty cash expenditure. The bookkeeping process was, and sometimes still is, a time-consuming process which requires a methodical approach. To understand the difference between bookkeeping and accounting, we also need to take a look at the accounting process. Although there is a single entry cash book system for simplistic financial affairs, bookkeeping normally uses a double entry system using debits and credits. This includes a ledger system and the use of journal entries. Before we continue with today's video, we're thrilled to be launching the Accounting and Tax Academy membership site this year. We'll be posting downloadable resources, tax tutorials, and exclusive courses that you won't find anywhere else. And the best part of it is, it's absolutely free to join. Head to the link in the description box below to find out more. Accounting is the process of taking the numbers which have already been organised by the bookkeeper and presenting them using standard accounting principles and a format that is suitable and understandable to stakeholders of the business. Stakeholders of a business normally start with HMRC, the taxman, as they are often a creditor, in other words, a body your business will owe taxes to. If you are a limited company, then Companies House too, as your business will have mandatory compliance requirements. And as your business grows, stakeholders could include partners, private investors, other creditors, employees, clients, and so on. Accounting will involve a good understanding of accounting standards that determine how numbers and information need to be presented within the accounts, and will usually require the accountant to make a series of adjustments to the accounts known as accounting entries. When trying to understand the need for accounting entries, it is good to remember that there are a number of transactions that may not appear on the bank statements but still need to be represented in the financial statements. A few examples include asset depreciation, home office allowances, provision for tax liabilities, accruals and prepayments. This is a process of moving income and expenses from the accounting period they were actually paid into the accounting period they actually relate to. It is also the job of the accountant to make the numbers more understandable for the end user. This is usually done by providing comparative numbers from the previous periods that allow the reader to see where the business is doing well and where it is not, as well as giving commentary in the form of notes that give further context. This could be along the lines of administrative expenses for the year ending 31st of December 2021 have increased 15% over the prior year. This is a result of replacing small office equipment where the costs were not capitalised. These notes give the end user a much better understanding of what's happening in the business and assist them to interpret the base numbers. In the UK at least, accountants need to also consider in what format HMRC require the numbers to be presented, and when preparing accounts for limited companies, they will also need to consider Companies House as well. The two terms are often assumed to mean the same, however this is not the case. Accounting records is a general term which refers to paperwork that support the numbers. This could refer to expense receipts, customer invoices, supplier invoices, and bank statements, as well as manual calculations prepared by bookkeepers and sometimes accountants. The financial statements, often referred to as accounts, are the result of compiling all the numbers from the accounting records and presenting them in a digestible format. The financial statements usually cover a set period of time, normally 12 months, and can be used for both internal or external uses. Financial statements for external use will usually need to be prepared in a particular format, which we will explore later. Now, there are definitely more than 3 differences between the two functions. However, we've summarized what we feel are the top 3 differences. Number 1, the objective of bookkeeping is mainly of data entry and the processing of raw data from source material, such as your business bank account transactions, whereas accounting is the adjusting of the already processed data to a standard and format that is digestible and acceptable for compliance purposes and third-party users. Bookkeeping is the start of the process, and accounting begins where bookkeeping normally ends. The accounting function cannot operate without the bookkeeping being completed, as it first needs the data to be organized in a way that can then be adjusted and made presentable. Number 2, bookkeeping tends to organize the numbers more for internal preparation for the business owners and management, and is not necessarily geared towards assisting you, the business owner, with decision making. Accounting, on the other hand, is often focused more on presenting the numbers for external users for a true and fair view, such as company's house, HMRC, investors, and your bank, and practically any other stakeholder or interested party. And it is normally geared towards helping you, the business owner and management, to make decisions. And finally, number 3, accounting is generally regulated by the accounting bodies such as the ACCA and ICAEW here in the UK, and requires specialist skills, training and qualifications. Whereas bookkeeping can be done by good technicians who don't necessarily need to be qualified or regulated by a relevant body, and you could even do it yourself. In short, yes you can. There's nothing to actually stop you. With powerful modern accounting software such as Xero or QuickBooks, it gives you, the small business owner, the ability to do it yourself. In fact, many of these software are becoming more intelligent, and the software providers themselves market their product towards a non-accountant, that is you, the business owner. However, let me throw in a word of caution. If I were to use an analogy, there's nothing to stop you from changing the oil and filter on your own car, or climbing up a ladder and cleaning out the gutters in your own house. But any activity comes with its own risks and opportunity costs. If you change the oil and filter of your own car and make a mistake along the way, or don't have the necessary tools to carry out the job effectively, then there could be consequences, not to mention the time, effort, and perhaps financial cost you have expended. And certainly, if your business starts to grow, the bookkeeping function will need more time, energy, and attention. So as a final thought, always think carefully about how much your time and energy is actually worth. I hope this video has helped you understand some of the key differences between bookkeeping and accounting in a bit more detail, and taken you one step closer to knowing your numbers. As always, let me know in the comments your thoughts on today's video, or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe, as this really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.